The Originator Connect Network, the nation's largest producer of mortgage events, is about fostering a community founded on professionalism, collaboration, and personal and professional growth, connecting you to the story of your success. Find an event near you at originatorconnectnetwork.com.
Welcome to The Interest. I'm Katie Jensen. The mortgage industry has had its shares of ups and downs this year, but there were some good things to happen too. Yesterday, the FHA reported to Congress that the share of FHA mortgages to borrowers of color reached 29% of all forward mortgage insurance endorsements. Delinquencies have also declined. But more on that later. First, our own Mike Savino took a look at where things are headed over the next few months.
We're pretty bullish on where this is going to go. You just got to get through the next 6-8 months.
Home prices seem to be settling and mortgage rates took a big dip after last week's positive consumer price index report. So should that mean a boost for origination? Well, maybe more like a quick blip.
We had a huge lock day on Thursday and Friday. And frankly, that's because people that were on the fence that already had pre-qualified now all of a sudden locked.
Peter Norden of Homebridge Financial says that the housing market tends to lead the economy both into good and bad times.
We are in a housing recession. There is no question about it. But it also leads us, it's the first one to bring us out of a recession.
And a shrinking market likely means further reductions in the industry. Norden thinks things will pick up in the middle of 2023 and into 2024, but for now, there's too many workers left from the 2021 boom.
This industry needed somewhat of a consolidation. We have way too many lenders for the amount of volume that's out there.
So how can you make sure you're getting by until things get better? It starts with simply understanding that things aren't as easy and you'll have to do more work to get each loan.
I think that's a major adjustment for a lot of people. I'm not saying there's anything wrong with it. I understand it thoroughly.
Also remember your place as an advisor. Customers are looking for someone who can help them with good advice and advise them through a market full of wild swings.
But people are always buying houses. People always have a need to refinance.
Most of all, guide your borrowers on when is the right time to buy. Borrowers naturally want to get the best deal, but while rates may eventually fall, prices won't, and that dream home may not stay on the market.
Builders can't put houses up as fast as the need is there, and that is problematic.
To hear more from Norden on where the market is headed, listen to The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcasts. For the Mortgage News Network, I'm Mike Savino.
Thanks, Mike. Now on to the FHA report to Congress. The FHA helped more than 1 million homeowners who are behind on their mortgage payments to obtain an FHA COVID-19 forbearance or COVID-19 recovery option to stay in their homes despite the dislocation caused by the pandemic. And in 2022, the FHA reduced the number of serious delinquencies, mortgages 90 or more days past due, by almost half, ending with a serious delinquency rate of 4.77%. The number had reached more than 11% during the height of the pandemic. The government agency also touted the work it did in helping people get into homes. It highlights the new policy that allows the use of rental history as a factor for first-time homebuyers and revised guidance for borrowers with employment gaps due to the pandemic. Coming up, a new study from LexisNexis analyzes the true cost of fraud and why lenders should start paying attention.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. Companies are embracing technology as a way to make things easier for customers and employees, but it can also make us more vulnerable to fraud. A new study from LexisNexis says that mobile transactions for U.S. credit lenders grew by 64%. That spells trouble because fraudsters are more likely to target mobile channel transactions. The report also notes that U.S. mortgage firms have a high cost of fraud when compared to other financial services. Every dollar of fraud loss costs $4.20. Mortgage companies continue to see more fraud attacks, particularly in the form of application fraud through direct-to-consumer transactions. And finally, do you know a woman helping to advance tech in the mortgage industry? Then let us know. We're seeking nominees for our Women of Tech Awards. These are women who are bringing the industry into the modern age, especially those who are pioneers and mentoring the next generation in their tech careers. There are only 3 days left to submit nominations. Honorees will be recognized in the future edition of Mortgage Women magazine and on this show. The deadline to nominate is November 18th, and self-nominations are welcome. Just go to nmplink.com/women of tech. We'll be right back with what else is interesting today.
The Originator Connect Network, connecting you to the story of your success. Find an event near you at originatorconnectnetwork.com.
Welcome back. Here's what else is interesting today. United Wholesale Mortgage says it's expanding its rate buy-down program. At the same time UWM announced the change, analysts at Argus lowered its view of Rocket stock from hold to sell. Now, Argus did not mention UWM's buy-down program as a reason for the downgrade, but Argus has a negative view of Rocket compared to other competitors in the mortgage industry, notably UWM. Argus still rates UWM stock as hold. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.